Hello, my name is Ron Kacharski. I'm a licensed investment advisor based in Melbourne, Australia, and welcome to the Vantage Advisory Economic Update and Investment Themes for 2011. The date today is the 16th of March, which is only a few short days since the tragedy in Japan. Stock markets are in chaos, and investors are uncertain what to do right now. Whilst there are risks out there, I believe there will be opportunities created by these tragedies and by the issues even in the Middle East, which we'll talk about in this video. So we certainly are living through some challenging times at the moment. If we focus on the Middle East, there's a revolution, a youth of the world revolution, hopefully to end dictatorship, corruption, and the unequal share of wealth in their country. There's also a lot of problems about food inflation, and that's aiding the problem. None of this could have happened, this youth of the world revolution couldn't happen without the aid of digital technology such as Twitter, Facebook and WikiLeaks. But let me just focus on Japan for a moment. Whilst everyone feels very sad for the people of Japan and their terrible tragedy, and we hope that they manage as best as possible, it seems to be that fear and hysteria and the front pages of the newspapers are driving stock markets into this panic. We could see some big falls and some big bounces in stock markets over the next few days or weeks. Much of that due to speculation, just as the speculators did during the period after September 9/11. Whilst most people don't believe that the Japan issues are enough to upset the global economic rebound, we believe in the short term it's going to be a tough time for Japan. But possibly within 6 months, the reconstruction will be a very positive boost to their economy, and it'll boost their GDP and be a very positive stimulus. And that will also benefit Australia, and I'll share some of the ideas on that later on. If we look at the world's running in what's known as a three-speed economy. What are those three speeds? Well, clearly Asia is booming, and also Germany because of the low euro. And there are countries going very poorly, way below long-term trend, and they're the peripheral countries of Europe, such as Portugal, Ireland, Italy, Greece and Spain. And in between you've got the countries of the G7, the Anglo countries, bumbling along at the bottom with subpar anemic economic growth. And that will probably continue for a decade. Now the truth is both Europe and USA were faltering late last year and around September or even a little bit earlier, which we've warned could lead to a double dip recession. We saw the US government come out with a massive stimulus, massive amounts of money printing and buying US bonds called QE2, quantitative easing 2, and that's been of a huge impact. That's driven up stock markets by 25%, and it's given people confidence to buy more commodities on this illusion or appearance of a recovery. The truth is the governments of the G20 can't continue to run these massive annual deficits in the deficits of trillions of dollars per annum. It's not sustainable and it must end. Either taxes go up or the government has to cut its spending. If we don't, we know that this will end in another financial crash somewhere in the future. Maybe 5 or 10 years down the track, but it will happen again, which is not good news for people soon to retire. But short term, this stimulus around the world is having a huge impact driving up stock markets, and that's creating great opportunities for investors like you and I. If we look at Australia, we also are running a three-speed economy. The above average is simple. It's mining, energy and health. What's way below average, due to the high Aussie dollar, it's simple. It's tourism, education and our manufacturing export base, which is being destroyed. And everything in between, like government, going to the supermarket or transport, is in the middle. And just be aware that Queensland was bordering a recession even before the cyclones and of Cyclone Yasi or floods, because the dollar's keeping people away and they're a tourist state. So let's switch to the stock market. It's ironic we now talk it's March 2011 and it's just a few days past the 2-year anniversary of the bottom of the world stock markets. Now they're still short of the previous highs and many investors in portfolios are still way below what they started with 3 years ago, but we've had a phenomenal run where stock markets have doubled in the last 2 years. And you can work out why. It's been a lot to do with a government intervention. But in the last 6 months, issues like the Middle East and Japan have erased all the gains in the stock markets for that 6-month period. But the stock markets are driven up by good reason. Big America is in a very strong position. It's making record profits, the best in 15 years, and much of their profits are coming from their Asian expansion and their divisions in Asia. And likewise, our stock market is being driven up by profits from exporting our rocks, our natural gas, our grains like wheat, and soon a lot more of our food. But I'd just like to talk about the risks ahead. Too many people focus on the rewards and not enough on the risks. There are massive risks ahead, not just what we're seeing in the last few days, but the rising cost of oil and energy is a massive threat to the global rebound. The world's basically running out of every major commodity, and there haven't been any significant oil discoveries for at least 40 years. And the biggest risk I see is food inflation. The cost of food, the amount people spend on food in the poorer countries can be 30 to 50% of what they earn, and that's not sustainable. So, having said all that, where are the opportunities and where should you and I be looking to make some money? Well, it's pretty damn hard at the moment. Most investors are getting very tired of the endless bad news. Over the last 12 months, we've seen interest rates rise, petrol, food costs are going up. Before it was droughts, now it's floods, civil unrest, potential wars and earthquakes. Very hard not to become numb to all that and tune out and want to bury your head in the sand. But I believe that it's important to do a couple of things. It's very important not to get numbed by all the news and the media propaganda. It's important to try to be a contrarian and to step aside from what everyone's saying and accept what's happening is just reality. It's not the end of the world, nor is it the end of ways to make money. So what you need to do is look for ways to make money that'll help you move towards your goals. And I'll talk to you about that in a moment. But one of the big tips is stock market's driven by emotion. So try not to allow emotions override your decision-making process. As I said, be a contrarian and try to be buying when everyone else is selling. Or the key to making big money is to buy assets when at fire sale prices or when they're very unloved by the majority. So if right now you're seeing oil prices at record highs, over $100 a barrel US, well, either invest into oil or be a contrarian and maybe look at buying into natural gas and buy businesses that export natural gas out of Australia. If food keeps rising, either invest in agriculture or find ways to tap into that theme. If Japan needs to rebuild, we'll look at investing into things like coal, iron ore, copper, or timber, which will be used in much of the reconstruction. Because we are in the middle of a mining boom driven by Asia and their urbanisation. And China's growth is really due to construction. 65% of their GDP is from their construction, and that's not going to stop for the next 10 years. But after you build those cities, people have to eat. So the next boom really is in food and agriculture, because there's more people born in the world each year, more people in Asia now becoming middle class or affluent, and more demand that won't stop. Let me switch to something that's a very topical issue. It's in the papers and the magazines. It's Australian housing. We were fortunate enough to see the housing cycle back in '95 and bought in when it was really cheap. Kew, Toorak, Hawthorn, those sort of areas. Well, housing's had a fantastic run in Melbourne for 15 years. So has Adelaide, Brisbane and Perth, maybe for 10. But we think that party's over. Prices will either stagnate or fall slightly over the next 4 to 5 years. So it's not a place to be investing. In contrast, Sydney has had 4 flat years. Rents will probably rise this year and prices will probably follow. But one area we think we need to be very careful of is people often attracted to areas like the Gold Coast, Cairns, Noosa, and they will fall very hard. They have already. Some have dropped 10, some have dropped 50%. So avoid the propaganda from the spruikers. Avoid buying coastal and holiday letting properties. They've got much further to fall. Try to be patient. There is a lot of uncertainty in the world. This leads to most investors making very poor investment decisions. The boom is over, the baby boomers are close to retirement, so that the super cycle in borrowing is over, and now we're starting the age of deleveraging, and you need to understand the impact on all investments. This is a vital time to reassess your strategies and your investments you hold, either in your own name, in your family trust, or in your super fund. There'll be huge opportunities created, and a lot of those will be in the commodity cycle. Food inflation's here to stay, so you need to have that in your portfolio. That's a way to make money. And the mining boom is far from over, so also consider owning precious metals, silver, gold, platinum in your portfolio. But remember, all investments are cyclical, and the key is to try to buy low and avoid buying high. A vital thing to do now is to find an advisor who will work for you, not work for banks and life insurance companies. But it's not just about making money, it's about creating a quality of life for you and your family for the rest of your life. I hope you've got some ideas from what we've talked about today. I hope you look forward to our next video in April. There's a button here to subscribe and you'll be automatically sent a link to our future YouTube videos to keep you up to date and keep you informed with the latest investment ideas. You can also email us and we'll answer any questions for free, or likewise you could call Vantage Advisory on 03 9866 5888 and we're more than happy to look at your portfolio and give you some advice. I'll finish with a quote because I think in these uncertain times this will make a lot of sense. Benjamin Disraeli, one of the former Prime Ministers of England, was quoted as saying, "To be conscious of that you're ignorant is a great step to knowledge." I hope I've shared some knowledge with you today and look forward to talking to you next month. Thanks.